Bear markets make Bitcoin investors rich, not bull markets. Strategy guide. Let's take a look at what happens when you invest in Bitcoin bear markets and why the 2018 negative 85% crash in Bitcoin prices is a godsend for smart investors. If we exclude Bitcoin from 2008 through 2013, which has very little historical data recorded anywhere, the first big Bitcoin crash started on April 29th of 2013 while trading at $147 per Bitcoin. It nosedived to $68 for a 53% loss until July 4th of 2013. Lasting only 3 months, but yet still the third longest and most brutal Bitcoin crash of the past half decade. And here's a chart showing you the market cap going from $2 billion down to $0.8 billion, crashing from $140 to $64. This drop in price didn't last too long. The next thing you knew, it jumped to $1,003 for a 1,364% gain by November 28th, 2013, and it happened in only 4 months. As you can see, Bitcoin was flat, doing nothing for a considerable amount of time, and then skyrocketed up. If you didn't sell, though, boy, were you in for a treat. After topping out at $1,200 in December of 2013, Bitcoin went on to crash to $230 for a negative 80% loss by September 14th of 2015. This crash hit a low range within a year that would flatline for another year. In this chart, we can see Bitcoin crashing from $1,000 down to $250 over the period of a year. Bitcoin then entered a $200 to $400 price range. Economists call this the expansion phase, from September of 2014 until April of 2016, before finally breaking out once again. Is this the sort of range we're in right now? And could it potentially last for a year like it did in this crash? If you had bought during the middle of this expansion phase in December of 2014, Bitcoin traded at a high of $351. You slow-bled losses of up to 34% for a year. After a full year of no return and volatility, Bitcoin out of nowhere would suddenly and unpredictably start shooting up to $20,000 in a short 2-year window from 2016 to 2017. Your total hold time was around 2 years. Your gain was 5,598%, and had you held through at least a dozen of 30 to 50% crashes that never lasted longer than 30 days, you could have realized that $20,000 Bitcoin price. And this is the 2017 run-up that began in early 2016. Now, even if you didn't sell most of your Bitcoin through the 2017 melt-up for a profit, like you should, you'd still be up 1,000% as of writing this in December of 2018 after suffering an 85% meltdown in 2018. Back down to Bitcoin in the $3,000 to $4,000 range. So is now the best time to build a big position in Bitcoin? $4 to $8 billion a day is flowing through Bitcoin. Someone thinks right now is a great time to be buying Bitcoin. The opportunity cost of not building a portfolio right now is just too great. What happens next in 2019 is institutional money begins flowing into Bitcoin and an ETF emerges. Then you miss the next big jump that happens unexpectedly and overnight. Sure, Bitcoin might crash to 2,000 or even lower in the next 12 months, but it just as easily could reverse course at any moment and never go lower than we're at today. What's important is that you're positioned to capture the next big move with the right percentage of your total portfolio, which I suggest should not be more than 15% of your total net worth at any given time. When your position in cryptocurrency is less than 15% of your portfolio, add risk and sell other assets to increase your risk if you have to do so. When your position in cryptocurrency is greater than 15% of your portfolio, take profits off the table, as you never know exactly where the top will be. And with that, you'll have cash on the sideline for the next crash. Buy the dip, sell the rip. That's what all great investors do over and over again. Will you? Here's a snapshot of our two model hypothetical portfolios, which are down around 20%, which I'm not worried about. The basic portfolio trades all of the yellow coins, common cryptocurrencies held by most cryptocurrency investors. And this is a 30-day weighted index of the top cryptocurrencies. This means the more money flowing into a cryptocurrency in the past 30 days, the bigger the position in our portfolio. And this allows us to copy what the rich investors are doing right now in the past 30 days. The Pro portfolio is for much more advanced, long-term, and wealthy investors with at least a current value of $25,000 to put into cryptocurrencies. This strategy invests in every cryptocurrency at Binance and IDAX, expanding the diversity and reach to hundreds of altcoins not held in our basic portfolio by common investors. Some of the most notable coins in this portfolio that aren't in our basic portfolio are EOS, Tron, Cardano, Neo. And more good news just in for Bitcoin. Bitcoin's mining difficulty dropped 15% in December, which likely continues to drop over the next few months, giving new blood to miners who've been hit the hardest. The last time Bitcoin's mining difficulty dropped so much was in October 30th of 2011 when it dropped 18%. At that time, Bitcoin was trading at roughly $2. Within 60 days from the mining difficulty drop, Bitcoin was trading over $5. We can see as the price goes up, the mining difficulty increases. As the price drops, the mining difficulty automatically adjusts back down. So this is good news. We should hopefully see a lot less miners going bankrupt and having to sell their positions, and new investments into mining with better mining hardware coming into the scene. Local Bitcoin being bought offline, where the government can't easily track individuals, is in a clear uptrend around the world once again, as we can see in this chart, which is updated weekly. Meanwhile, the Bitcoin whales haven't necessarily been selling, but rather converting into a massive Ethereum position for one coin. As an example, according to the research from Dyer, there are currently 500 actively traded Ethereum addresses among the largest 1,000 addresses. These wallets have accumulated massive amounts of Ether during 2018, growing their holdings by 80% since January, more than any other period in Ethereum's history. As of the end of November, these addresses collectively held 20 million Ethereum, worth about $2.2 billion, and constitute nearly 20% of the circulating Ethereum supply. We can see the growth of Ethereum by this group of whale addresses over the past 2-year period. And perhaps we have a reverse head and shoulders pattern incoming for all you technicians out there. For Christmas, I want a dragon. Santa Claus says be realistic. How about a $7,000 Bitcoin? So what color do you want your dragon? If you haven't yet, join our email list and download our premium cryptocurrency buy and sell alert platform free for the 90 days by just going to portfoliobuilder.io. Type in your email. There's no credit card required. We have a world-class cryptocurrency education right after you sign up. Free one-on-one webinars. And if you do decide to upgrade to our Pro package, you'll be able to unlock thousands of altcoins for only $19.97 a year. And that expands your portfolio beyond all the common coins that most investors hold. So thanks for your time. Look for a new update tomorrow.